Good morning and welcome to the Orlando Real Estate Buzz. It's a new year and we're starting off with some fireworks all over the place. It just boom.
It's exciting.
We're 8 days in and the world's in total chaos. Just unbelievable. Hello, I'm Brenden Rendo with the Homes in Orlando team and joined as always by Joseph Dionne of Aptly Home Loans.
What is up?
Yesterday
New Year's thing.
I mean, where do you start? Where do we start today?
There's so much that has been happening, and it's so crazy. And I'd love to get into the massive geopolitical nature of all of this because those things impact everything. But we do have to follow a similar trend. We have to talk a little bit on point with housing, right?
Yep. So we got a number of things happening with housing. Number one, President Trump came out yesterday talking about institutional investors. But then we also have up in New York City, their mayor's housing appointee talking about something totally different. And I think that's just a great place to start. So hello, everyone. Happy New Year and welcome back to the Orlando Real Estate Buzz. All right, Joe, let's hop right in. Trump yesterday came out, Truth Social, boom, made this statement. For a long time, buying and owning a home was considered the pinnacle of the American dream. It was the reward for working hard and doing the right thing. But now, because of record high inflation caused by Joe Biden and the Democrats in Congress, the American dream is increasingly out of reach for far too many people, especially younger Americans. It is for that reason and much more that I am immediately taking steps to ban large institutional investors from buying more single-family homes, and I will be calling on Congress to codify it. People live in homes, not corporations. I will discuss this topic, including further housing affordability proposals and more at my speech in Davos in 2 weeks.
I mean, this is a tough one because it's a typical Trump post, right?
Mm-hmm.
Like he's hit one, he's gonna take a jab at Joe Biden and the Democrats, but realistically, a lot of the inflation started when he was in office still. But we get to the next piece. He's hitting on something. They're talking points. They're pressure points. Affordability is an issue. Young people do often feel like, am I ever going to be able to buy? So this pandering to an audience, but he can't get reelected after this. So what's he doing?
Yeah. Like I look at it and you got to remember Trump is a promoter. He likes to hit people's nerves. He likes to get people jumped. And you look at what's happened, New York City moved far left. You had Miami, which had a Republican mayor for 26 years?
Ever, yeah.
Yeah, just went Democratic. And you look at all the polling and what is probably the number one issue for people right now? Affordability. Housing affordability. He's right on one point. And that point is, it is the American dream. It is. But is it because of these institutional buyers? Well, I don't think so. I mean, when you look at the numbers of market share, companies with 100 plus properties, it's literally right now only 1.2% of the entire scope of single family homes. I mean, yes, back when money was cheap for everybody, it jumped to a high of 3.1%. But if I'm a good hedge fund, a good manager, what do? I take profits.
Yeah.
And what did they do?
When it's high.
When the prices were high, what did they do? They took their profits. And you see, really, since we've seen more of a stale market over the past couple of years, they're out.
Yeah.
They're out. There's less of them.
You're 100% there. Like they got in, they foresaw what was happening. So they got in, they realized money was super cheap. So where to park money when it's like, okay, well, real estate goes up. We do this. We're buying like big drop. We get this. Then they see it skyrocket and they go, oh shit, I made 30% on my dollar in 6 months. I'm out. Or a year or two. Like, so they all like, they did this really quick. And I don't think, I think that's exactly what we're seeing is it feels like it because when we were trying to buy homes and people were buying in 2021, 2022, they felt like all they were doing was competing with the institutional investors. But they really weren't to a huge extent, but it felt like it.
Yes. Yeah, it did feel like it. I think I've sold maybe 3 or 4 homes to an institutional investor. But that was, quite honestly, most of those were 6-7 years ago. Nothing, as of late, all my listings have gone to people. And I actually, let people know, hey, you're selling your house. This happens to be an institutional investor. They're going to turn it into a rental. And this is a family, and yeah, we're pretty darn close, but they're a few dollars more. Who do you want to sell it to? And give the seller a choice. And a lot of sellers said, you know what? Yeah, that few extra bucks would be nice, but I'd rather see a family in my home. And that's the decision they made. But, to have that option, that's their choice. That's free enterprise. And, last night I was reading, shouldn't have done it because my blood pressure went through the roof. Reading a lot of comments of people, and it was frustrating because it's like, guys, before you react, think through this stuff. Because think of all the people who have investments in real estate investment trusts that have single family homes as their main portfolio. Are you going to take all their chance for returns away? I mean, is that fair? So to me, there's a lot of questions. I think he's looked at the scope, and he's smart. I mean, the guy is smart. He knows how to hit people's nerves, and he needs to make people feel like he's doing something for them. Is he really doing something for them? No, he's not. It's, to me, it goes back to the portable mortgage, which we know is not going to happen. That talk has died, right? And then the 50-year mortgage. That talk has died. Yeah. So I think he's throwing things out there, trying to find something, trying to find a solution. I mean, Realtor.com did a breakdown. They put out right after the first of the year. What would it take to make homes affordable again for people? And this was just, you look at these numbers and you're just like, wow, this is a wish list.
Like, I mean, 2.65%. We've said this on this thing. We're probably never seeing that again. If we see rates under 3, at 3 or under 3, I'm more concerned about the state of where the economy as a whole. Like, there's a bigger issue in my mind. Like, brink of really bad, or we're coming out of something really bad again. So we won't see it. We just won't. Median income must rise by 56%. This is the tough one, right? Could it happen? Yeah, I guess in theory, but is it the problem with that is what? How long for that to happen, and what will the prices be when that happens? Exactly.
And then you got to see a 35% decrease in the average price.
I mean, what do we see with the markets of late? Because this was the big concern, everybody. I think the market everybody was saying that home prices are going to drop significantly. We were, are we going to see a 10% or 20% correction? And I think the statistical numbers, they can make it look like it's still climbing. Potentially, there are probably areas that it is a little bit, but there's a lot of areas that have seen a pullback. But the challenge is was it a real pullback, or was it just people were artificially buying above what it was worth because of the demand? Was the home and that's where I kind of feel that $500K home was never worth $550 in 2020. It was worth $500, but people got so caught up in that bidding, that auction mentality that they just overpaid for it.
Yep.
And now it came back to, well, that $500,000 home has slowly appreciated, but now it's worth $515 or $520. And people are going, well, I paid $550 for it. It's like, well, you overpaid by $50,000
overpaid.
5 years ago.
Yep. You overpaid. You know, it's fear of missing out. You know, it hit everybody. You know, I mean, I remember, we sold the one house. I think we had 35 offers on it. You know, Josh's house. It was we did an open house, and the minute we opened the door, you know, I think we kept it open an extra hour just so people could get into the house. And we had like 35 offers that day, one day. And it was absolutely amazing. And people just kept, well, we'll go up another $5,000. We're willing to go up another $7,000. We're willing to go up this. We're willing to let them stay for 6 months. We're willing. It's like, holy cow.
Yeah. That entire mentality of like, you know, I remember we talked about it. Like agents were advising their clients, no inspection contingency, no appraisal contingency. And I was like, holy cow. Like we kind of created a little bit of the chaos, you know, unintentionally, but that's what happens. It's like the Black Friday when Black Friday was a thing, right?
Yep.
Those sales where you only got it in store at midnight when it opened. So people would like stampede to get the 3 TVs that were $150, but were normally $2,000, right? Yes. Like, now it's not a thing because all the shopping, everything, it's open 24. Now I kind of joke, like now we're seeing stores being like, we're closed Thanksgiving. We open at 10 on Friday, right? Like,
well, who cares?
2020 was the hype. 2021 was still, but we're out of that now.
We're out of it. Yep, exactly. I mean, one of the good things we do see is that the share of income required to pay the typical mortgage is starting to slowly drop.
Okay.
And you see, you know, this is really kind of our 2022, 2023, where we're well above 30%. I think it was averaging about 36. And you see, we are slowly starting to come down. And that could be, I think that's a reflection of a couple things. One is, you know, rates have been a little bit better overall.
Yep.
2 is incomes are starting to rise again.
Yep.
Which is great. But 3 is also the pricing is coming down a little bit. You know, sellers are not getting exactly what they want. You know, we've seen, we probably averaged about 92, 93% of original list price the past year, if we go back and look at the whole year. So there's pricing that is coming down, negotiation that's coming down overall.
Yep.
So all that to me is really good news. But one of the interesting things though is seeing you've got Trump over on this end, but then you've got the mayor of New York on this end, which is totally different. And this was his nominee for the housing department, I believe it is. I'm not sure exactly what her title is supposed to be, but this is her comments.
Is that for centuries we've really treated property as an individualized good and not a collective good, and we are going to transitioning to treating it as a collective good and towards a model of shared equity will require that we think about it differently, and it will mean that families, especially white families, but some POC families who are homeowners as well, are going to have a different relationship to property than the one that we currently have.
That one was interesting to me. The collective.
All right. So you gotta break me that. What collective? Like what?
Collective, shared equity.
So are we talking about like condo style?
I got no clue. All I thought immediately was shared equity, community, communism.
Yeah, that's what it sounds like. I'm assuming it wasn't that. Like,
you know, and you're just looking at it like, yeah, you're going to take my property. And what's interesting is the proposal that has been put on the board up in New York City. And this, as an investor in New York City, I'm getting out as quick as I can. They're proposing 180-day waiting period before you can sell.
So is this like
I read it over, but I really got to read it again because it was difficult to understand. But that first 180 days, that property has to be offered first right of refusal to like a nonprofit organization. And if the nonprofit and you can't come to terms, then you have the right to sell it on the open market.
So when we say nonprofit organization, like, I mean, like what's going to be the barrier? Like, I feel like a lot of this is a strategy to just kind of move money to somebody else. Like, it sounds like they're trying to hit a talking point, and it's like, hey, we know it's not affordable. We're going to create affordability, but all we're doing is saying we're going to take homes and we're going to move it to another business that just has a tax classification that they're not for profit, so they're exempt from paying taxes.
Right.
Like, how many nonprofits have, like, I'm curious to see what institutional investor has already filed nonprofit paperwork in the state of New York.
Seriously. It's, it's proposals like this. It's what happened to you work hard, and if you're successful, you're celebrated. I mean, this kind of hit me the other day. When you look at that, then you look at this is the billionaire tax that they're proposing in California. They're going to tax your net worth 5%. So for the first time in history, we have to disclose our entire net worth to the government. Yeah.
I mean,
and we had a tea party over what 2% increase in tea tax. And we're supposed to sit on the sidelines for this one. Come on.
And technically, it was just the taxes that were, it wasn't even all tea. It was just some tea. But I think the challenge with this is, like, we're starting to see, like, and we've seen this for the last, is people want to, like, they go, I'm not making money, they're a billionaire, like, well, they should pay more. And it's kind of this weird phase where it's like, I think our tax laws are so complex that, a lot of billionaires can, and millionaires too, a lot of people can evade. But, like, like, the reality is that they even when you sit there and go, oh, well, they game the system and they do that, they're still paying more taxes than the most people. A lot of people that are, that are quote unquote, oh, I'm so upset, they need to pay taxes, they need to pay more, they're cheating the system. Well, these guys are actually paying some taxes, not all of them. Like, they figure out ways to get around. But most of the people complaining are the ones that also get refund checks every year too. Yeah. Like, money's got to come from somewhere, and we all have to. Like, I've always joked, like, the fair tax movements that you see, the state of Florida, where DeSantis wants to get rid of property tax, though I don't like a lot of the existing proposals, especially the ones that say if the home's worth $500,000 or more, like, you don't get any benefit. That seems stupid to me. Yeah. But what everybody's like, well, how are the counties getting? Well, the sales tax is going to go up. Yeah. That's what's going to happen. And guess what? If you buy shit and it's more expensive, but you save over here, like, it kind of makes sense. Yeah. Like,
that's one thing that a lot of people just don't understand is, the consumption, the sales tax, the consumption tax. Well, if I'm a billionaire and I go buy $100 million yacht and I have to pay a 7% sales tax on it, I'm paying a ton of tax. But if I'm, average Joe, and I'm just going out and buying a new $300 TV, my tax is nowhere near what his is. Yeah. So I agree with you there. It's kind of like, I really think it should be more of a consumption type platform. And to me, the other big thing is, we've seen it this week come out even more in, past 2 weeks, is all this fraud. Would we really, excuse me, would we really have to increase our taxes if we just cut out all this fraud? I mean, the billions of dollars. You want to know my proposal? Do away with 501(c)(3)s. Do away with them. Everybody's that's a corporation is for profit, because you truly are for profit. Okay, non-for-profits doesn't mean you don't make a profit. It means just the way you utilize the profit has to be redirected back into your own system. Okay, that's it. They make profits. They do. So you imagine if you took all these non-for-profits out there, these thousands upon thousands upon thousands, and actually had them pay tax. Boom. Guess what? We're fine. And people are like, well, the churches, well, you know what? Churches can pay it too. I don't have a problem with that. The churches can pay it too. So I do away with all the non-for-profits. Boom. Get rid of this classification. You're all gone.
I mean, I'd see it. I'd look at it. I don't know if that's the right answer. It might be, but I definitely think our tax codes, our tax laws, everything's so complex. Mm-hmm. I do think like this whole like gotcha shit that, hey, like we're going to tell you what you owe. Like you tell us how much you think you owe or how much you think you should get refunded back to you. We'll tell you if you're correct. But if you're wrong, we're going to let you know, we're going to penalize you, but only if you're wrong and it hurts us. Yeah. But it's like, well, the IRS can easily figure out if you underpaid them. Like, so why do we need to do all the other bullshit?
Yeah.
Like, I think that's the key is like, there's a lot of streamlining we can do because of technology. Like, let's start getting rid of some of the waste. Let's start getting rid of the spend. Let's start getting to like, the reality is if we simplify the system, I think it'll see better results. And it'll, as a country, as an economy, as this and that, it's going to be much, much better. I see all these proposals in here. Did you hear about the one? I don't have the details on it at the top, but it was something like a 5% sale tax that they were going to add on top of when you sell a home. That was being floated around.
Yep, saw that.
Like that to me seems crazy. Yeah. Right. Like, oh, you're going to pay an additional, if you sell it, you're going to pay an additional fee of 5% tax. Like, I'm like, this is like, that's going to cripple things.
Yeah.
Like, I think people are looking to solve, they're basically, and we're throwing darts, right? Yeah. They're going, I see a problem. How do we fix it? Which I agree. Like, hey, let's throw ideas out. I think the problem is too many of these ideas are not being vetted before they're thrown out.
Yeah. They just kind of throw them out. I mean, I understand it completely. Affordability is the number one issue. It is the number one issue going into this election year, and everyone's trying to find, a solution. The Democrats in their campaigns were successful in riling people up, getting their voters out based on affordability, promises of affordability. But you get in and you raise the rate on the subway right away.
Yeah.
Unbelievable. So that's just a little overview. What's the craziness that we've had just in the past 8 days?
2026. Let's go. Let's make it interesting. Give us something to talk about all year.
I think it's going to be a fun year. I think it's going to be a good year. Okay. I think it's nice. We're seeing, over the past couple weeks, really, interest rates really have leveled out. And I think that's making a lot more people more comfortable. Things have settled down, and I think we're going to fluctuate. We might break a little below the 6, but I think we're going to stay in that 6.25 range most of the year. From things I'm seeing, and I think that's going to help a lot of people overall. So let's look at our Orlando numbers for the end of the year. 361 for last week. This goes into the first couple days, but really the last week, which isn't bad whatsoever. Interesting thing is we saw a big drop, and we did through all of December, a big drop in our inventory. We're down nearly 400 homes, single family homes in the last week. And that's a reflection of a lot of people taking their homes off the market, just getting tired of it. Even the condos, for really a short week, 104 is not bad for a short week in the condo market. And again, their inventory has decreased quite a bit, about 250. Overall months of inventory, sitting about 5 months. So that's decreased a little bit. And that's again, more to the number of homes available. But look at this, for the end of the year, a lot of people needed to get rid of their houses. We dropped to 92.2% of the original list. So some big discounts going into the end of the year. And average days on market, we're still holding up there, close to 80 days, 78 days on the market. You look at our graph, weekly sales, right before Christmas took a little dip, but everybody got their closings in, including my daughter. Congratulations, Taylor, on your home. Thank you, Joe, again, and your team for making it extremely smooth. It was fantastic. We utilize, just let everyone know, my daughter and her boyfriend's a nurse. We utilize the Hometown Hero program. And what they were able to get, about $15,000?
Yeah, right about.
Yeah. And they actually came in with no money out of pocket. So we made it work. It worked fantastic for them. So congrats, Tay.
Congrats.
And then here's the big thing, watching our inventory. Since right around Thanksgiving, you've seen and you see this pretty much every year, but this was kind of big. We've seen a huge decrease. That's roughly about 500 units.
Yeah.
And considering, I think the whole month, I think we sold about 400, somewhere in that ballpark. That's a big drop in the number of units in inventory.
Yeah.
And this really is why we had the largest number of withdrawn properties and canceled properties at the end of the year, which you'll probably see a lot of people with the MLS. The way it works is you have to pull a property off for 60 days for it to what they call refresh.
Okay.
So you may see a lot of these people pull their house off for January and February, get it reset for the spring market. Really here in Orlando starts in the March timeframe. So I think we're going to start maybe second week of January. We'll see it slowly start to increase, but March is when we'll really see them start to pop. Okay. Inventory start to go back up. Then condos, we actually dropped from 11 months to 8 months. Woo! Woo! And the original list, the sales price dropped to 90%. So again, people under the year wanting to get rid of their units before the end of the year, gave away some very big discounts.
Just a few.
Yeah. So going into this year, my feelings on the Orlando market, I think it's starting to feel like it's loosening up a little bit. I've talked to several agents, who've actually had showings where they hadn't had any showings for the past, 5 or 6 weeks. Seems like some buyers are starting to come out that haven't been on the market yet. And I think we'll end up doing a higher volume, maybe 5%, 6% increase over the previous year. But I think you're still going to see a lot of opportunities. I don't think we're going to see the builders take away their incentives anytime soon. We're still getting those. So from the buyer's perspective, could be an absolute great time, good year to step in, stop letting fear overrule you, and make that jump, because there can be some good opportunities and asset growth over the next couple of years.
Yeah, I agree. I think it's going to be I think it's going to be a better year than it was. And I'm seeing a lot of industry side moves that are kind of foreshadowing that. I think the general population, when it comes to real estate and mortgage companies, they're starting to position themselves for what tells me that they see the potential for a stronger year. People that have sat on the sidelines are strategically focused in other areas. I always joke when you see all the business coaches that are like successful, and they're all like, oh, I'm just going to teach mortgages and I'm going to do this. Like they all do it because they went into a hard time of like, we're going to coach you how to be successful during the hard time. But when they see that it's about to not be a hard time again, all of them go back into opening a company or starting something new.
Okay.
And I've seen there's a lot of these companies that it's like, oh, like successful, or people that are, took a position from a producer to an executive in a company, and now all of a sudden they're opening their own company. I'm like, all right, the writing's on the wall. It's not just one person. It's, I'm seeing dozens of these posts regularly from like, industry coaches and professionals and executives. And I was like, okay, we're starting to see that there's I think there's going to be a shift.
Yep. You can kind of feel it in your bones. So, well, thank you all for joining us, and we'll be back next Thursday. And any questions, if we can help you, always feel free to reach out. Please like and subscribe, and join us again next Thursday on the Orlando Real Estate Buzz. Have a fantastic weekend. Take care.